Hey there, Investaholics and casual viewers. Welcome to the Megatrend battle today, where we will look at RBTZ and ROBO. So this is the battle of the robotics, automation, and AI ETF crown. So let's see who the winner is. So robotics and artificial intelligence is a transformational technology megatrend with the ability to disrupt multiple industries due to significant economic incentives related to aging populations, rising labour costs, and opportunity for performance improvements. So throughout the supply chain. In a rapidly changing world, megatrends are drastically reshaping the way we live our lives and do business. I think the process has become more complex. So yeah, just the way that we live, to try to squeeze more productivity out of things and make the average person's life better. I think we're going to see a lot more automation and artificial intelligence. Are you ready, people? Hang around. This video is pretty information packed. So yeah, just hang around and hopefully you guys enjoy. Hey there, Investaholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at KrackTheSky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up. And also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. So, as mentioned, we're going to have a look at the battle between these two ETFs, so ROBO and RBTZ, for the crown of the best robotics, automation, and AI ETF on the ASX. So ETF's ROBO Global Robotics and Automation ETF, that is the code there's ROBO. And we also have RBTZ, and that one is the BetaShares Global Robotics and Artificial Intelligence ETF. Just thought it'd be good to take a look at this slide here quickly. So the rise of robots and artificial intelligence. So you can see the market is going to be massive for both these technologies in the next 4 to 5 years and beyond. It's a multi-trillion-dollar industry and opportunity. So regardless of which one of these ETFs you like the most, I think you've got to have some exposure somewhere, whether it's directly to one of these companies in this, in the top 10 of one of these ETFs that you might like more than the ETF, or buy one or both these ETFs to give you exposure. I think it's a very sensible thing to do. Okay, let's just jump on in now and have a look at RBTZ, which I mentioned is the BetaShares Global Robotics and Artificial Intelligence ETF. So the objective of RBTZ is to track the performance of the Index Global Robotics and Artificial Intelligence Thematic Index. This one includes global companies involved in the production or use of robotics and AI products and services. So Index specializes in the development and publishing of custom indices. So you probably haven't heard of this index before, INDXX, bit of a mouthful. To be eligible for initial inclusion in this particular index, the company must meet certain criteria, including such things as the company must have a minimum market cap of more than $100 million, minimum average daily turnover for the last 6 months greater than or equal to $2 million. So it's not really much of a hurdle there. If you're not turning over, if you're shares aren't being bought and sold more than $2 million in that day. A very, very small company. Security must have traded on 90% of the eligible trading days for the last 6 months, meaning it can't be closed. It has to be constantly open, so there's no issues with the company on the stock market. I mean, the security must have a minimum free float equivalent of 10% of shares outstanding. So pretty much you can't have the founder holding control of the company, and effectively there's no shares to be traded, so there's a good percentage of shares to trade, then it won't get an index. The company must have its primary listing in a developed market as defined by index. So yeah, why are we bothering this one? So we're looking to invest in disruptive innovation. So RBTZ offers exposure to a transformational technology megatrend, the increasing adoption and utilization of robotics and AI. It's convenient, cost-effective access. So in one trade, you get diversified, cost-effective exposure to the world's leading robotics and AI. So a sector geographic agnostic, if I can actually get those words out, geographically agnostic. So yeah, RBTZ's methodology invests directly in robotics AI theme. Yeah, pretty much it doesn't matter what the industry or the geographical classification is. Yeah, so you're going to get global, or in theory, you're going to get global exposure to all these great businesses. So, I mean, this one, I suppose the main difference between this one and the next one we'll go through later, but this one sort of looks at artificial intelligence, which is an interesting I suppose difference between the two ETFs. Okay, when it closed out yesterday, they had a net asset value of $14.57, closed just above that at $14.75, market cap of $134,830,000. Management costs not too bad, 0.57%. You'll get a dividend annually in July, and the dividend will be roughly, at this point in time anyway, dividend yield at this point in time, as with all these things, it's backward looking, 3.7%. So, as I've kind of gone over before, this ETF is relatively new, listed on the 12th of September 2018. You know, so the strategy still needs to run its course or prove itself, for a better way of describing. So RBTZ could be used as a key component of a portfolio to build tactical exposure to emerging trends like robotics and artificial intelligence. You know, for younger investors, you know, this could be a good investment, and you know, to give you exposure to a global transformative trend over the long term. So since July 2020, the market cap has increased from 39 million. So there's been much more money, a lot more money put into this. So it's gone from 39 million market capitalization to 134 million. So the number you see there on the screen. So that's an inflow of over 95 million. So, you know, since I reviewed this last, you know, less than 12 months ago, the ETF has grown by almost 2.5 times. So if you're chasing a simple, cost-effective way to get exposure to a diversified portfolio of the world's leading robotics and artificial intelligence companies, this one could actually be interesting to look at. So, you know, this is a rapid technology advances. So it's definitely something to keep your eye on, even if it just goes in your watch list. But it's had pretty good performance over the run so far. The robotics revolution should offer a growth potential to investors who embrace this emerging global investment megatrend. So as always, we like to look at additional stocks here, just to make sure that we're doing some good research, thorough research. We're going to review Robo here, but also have a look at tech, because tech's a similar type of thing as well. A bit broader based, but covers off a few of the bases for these ETFs as well. Okay, so let's have a quick look here. So since inception, you're looking at 17.35%. Top 10 holds Nvidia Corp, which does all the chips and that type of stuff for your computers. So most of you guys should be able to look at your computer and sort of see it's got an Nvidia graphics chip. My computer's got a GeForce graphics chip in it. And then you've got a selection of other smaller type companies. Most of these I've never heard of. Probably worth doing a little bit of research just to find out who these guys are and what they do, and their prospects for growth and that. But yeah, I think there's a good selection of different types of companies and different locations for these type of companies. So, you know, I suppose you're looking at Fanuc, if I can actually say it right, Fanuc Corp, how do you say it? So they're Japanese. So you've got sort of a mixture of also some defense companies, and you know, they do drones and things like that, healthcare, transport. So, you know, companies looking at AI in transport, you know, autonomous trucks and things like that. Also companies looking at robotics in agriculture, so planting and harvesting machines. Yes, I think there's definitely a good sort of spread of companies over different industries, not just say, you know, car manufacturer or whatever. Okay, let's have a quick look at Robo. I suppose, for the better word, what's under the hood probably. So investment objective, Robo aims to provide investors with the returns that track the performance of the Robo Global Robotics and Automation Index by holding all the shares that make up the index closely in proportion to their index weights. So this ETF employs a two-tiered equal weighted system for companies that operate in one of 12 subsectors relating to robotics, automation, and artificial intelligence. You know, sort of, you're going to get exposure to manufacturing, 3D printing, logistics, and security. So the Robo Global Index universe is constructed by a board of strategic advisors that represent some of the most knowledgeable minds in the RAAI world, with 200 years of combined experience in these fields. So Robo Global Robotics and Automation Index is the first index that provides investors with, or was the first index I should say, that provided investors with comprehensive, transparent and diversified benchmark that represents the global value chain of robotics, automation, artificial intelligence related companies. So while we were looking at, so you're going to get exposure to the robotics automation subsector. Technologies, so RAAI, which is a bit of a mouthful, technologies are already disrupting nearly every industry in every geography, so all over the world. creating a swift transition to automate or fail economy that is dictating the success or failure of corporations large and small. So pretty much to keep costs down and be able to operate in this type of world and compete, you need to definitely have some automation and AI somewhere within your company if you're looking at competing on a sort of a country basis or even global basis these days. So these guys, experts in the field. So Robo Global is a recognized leader in robotics and automation investing solutions. The coverage teams includes full-time financial and research professionals supported by industry entrepreneurs and academic leaders who specialize in global development across the RAAI supply chain. Robo Global devised the benchmark industry classification system to help investors navigate the emerging industry. As always, liquidity is a key factor, so Robo holds only stocks trading on recognized global exchanges, and index includes filters on markets, capitalization and daily trading volumes, as well as individual stock market caps to ensure that funds tracking the index do not become significant shareholders of any of the constituents. So pretty much all that means is you don't get overexposure to one particular company. So they try to keep the shareholding relatively equal. Okay, let's have a quick look here. Net asset value of $93.89, trading just above that at $95.75. Just looking at that, do I want to buy it? Probably not, because it's trading above the value of the net assets. So that's something to keep an eye on when we're looking at purchasing. Consideration to keep in mind. Market cap of $223 million, which is pretty reasonable. Management costs of 0.69%. You get a dividend in July, and dividend yield is pretty low, so 0.5%. So yeah, sort of as we kind of mentioned, Robo tracks the Global Robotics and Automation Index. Robotics and automation could be described quite easily as an unstoppable megatrend. To get the excitement and the blood flowing, I should say. So major global companies are heavily investing in automation, which will reach across every sector of the global economy, as we've touched on previously. So, you know, quite possibly owning this ETF could make up for lack of tech companies listed on the ASX. So, you know, that kind of goes for RBTZ as well. Robo would give investors diversified exposure to solid international companies within the rapidly growing industry, you know, sort of developing and deploying robotics and automation technologies. Similar to RBTZ, so since July 2020, when I reviewed this one last, market cap has increased from 125 million to 223 million, so that's a gain of $98 million, so almost $100 million. So as I said, so since I reviewed it last time, so it's sort of grown by 80% or thereabouts. So you can see the inflows of money. So in less than 12 months, you've seen over almost $100 million into RBTZ. In the same period, you've seen almost another $100 million into Robo. So you can see that people are starting to take notice of these trends. yeah, so obviously, as I always say, we need to be looking at other ETFs as well. So we're kind of looking at RBTZ in this slide, but as I sort of said previously as well, take a look at tech. It's sort of a broader based one as well, so it gives you a bit more of a broader based exposure. But yeah, you can kind of see that money is coming into these ETFs, which isn't, you know, I mean, the fact that money's coming in isn't surprising. These are the sort of the technologies and the sectors of the future. So you can see it's had a pretty good run since inception, over 21%. Got a good cross section of companies here. I mean, really the only one I know a lot about is iRobot. They do all the little vacuum cleaners and things like that, but I think that's a company with a lot of upside as well, just as an individual company. I mean, if you're looking at watch these videos just for the sheer fact that you want to see more information about the overall trend, but also look at some of these companies inside these ETFs. You know, go and do some research on iRobot. I don't think that one would be a bad place to start. But yeah, overall, I think, you know, the performance of the ROBO since its inception. Was it 2017? I think it was, yeah, the 13th or 14th of September 2017. So it's roughly been running 12 months longer than RBTZ. It's pretty good if you can get 21% per annum. You know, that's outpacing the average of, you know, the ASX 200, you know, by almost double or whatever. So definitely something to have a look at to add to your portfolio. Okay, let's have a look and see if we can work out a winner. So, you know, with the pace and change across businesses and society growing exponentially, I don't think investors can afford to ignore the influence of these, you know, effectively automation, AI and those type of things. So the massive megatrends. Assessing investments in these megatrends, however, can be difficult for, you know, the average investor. I know I find it difficult. It's just a lot of these things, companies are quite complicated. You know, I'm not saying that I've got a lot of knowledge about any of these things. I'm just looking at the ETF, and then, you know, you want to do a little bit of research on some of the companies that they hold in the top 10 at least. You know, so, you know, this gives you a little bit of a way to, you know, if you don't have the expertise in one company, to actually pretty much broaden your risk and be able to invest in the sector and get the uplift of the sector as a whole, not just look at one specific company. So I think the potential for growth is reflected in the fact that the world's largest economy, China, has approximately 1 robot per 100 manufacturing workers. So I think that's sort of where the scope for a lot of, you know, wealth to be created as places like China actually automate. So when you look at it, other places like Singapore and China have sort of 7 robots for every 100 people employed. So there's still a good upswing. You know, you're going to see a lot more money going to these companies that build robots and sort of that artificial intelligence type of stuff. So the growth, you know, in broad terms, the growth of robotics will be driven by efficiency gains. You know, on offer as robots perform monotonous tasks, so things that, you know, after a while humans get bored with doing. You know, you're getting carpal tunnel syndrome and all that type of stuff. So move out of that sweatshop type activity and do something more creative at that time. So looking at some key criteria I picked out. So price. You know, if you're a small investor, you're looking to get a few shares on your belt, you know, looking at the price, RBTZ's trading there at just below $15. So if you're investing a couple of grand, you're going to get quite a few shares. But the reality is it doesn't actually matter. So it's just really you're investing the same amount of money. So the amount of shares doesn't really matter. So price-wise, it's something I wouldn't really worry too much about, the actual price of the ETF is trading at. Fund size, so the bigger the fund, the more liquidity. But I think now, since mid-July last year when I reviewed RBTZ and RBO, as I sort of mentioned before, you've seen almost $100 million come into each of these funds. So that gives quite a lot of liquidity. So I think probably either of these funds, looking at the size, should be fine. But if size is an issue, definitely ROBO sort of ticks that box as being the larger fund. Management costs, RBTZ is a bit cheaper. I think there's also some other recovery costs associated with ROBO, but I couldn't quite work out what was still current and what wasn't. I sort of checked through a few different documents, and there was a few different additional cost recovery of 0.13% for ROBO, but I didn't put it in because I wasn't 100% sure. So just keep that in mind, that there might actually be an additional recovery cost for ROBO. But having said that, the performance of both of these ETFs, over the last 12 months has been phenomenal. Over 41% gains for ROBO, over 36% gains for RBTZ. As I kind of touched on as we're going through performance since the inception of these, both these ETFs is really, really good, really, really strong. If you can compound for the next 10 years at 21% or even 17%, you're really, really making your money grow. If you invest $10,000 into one of these and you get, compounding of 20% for the next 10 years, that's a lot of money, so. Number of holdings, ROBO has 86, RBTZ currently has 32. I suppose listening to what the majority of people say, diversification. So I suppose ROBO gets a tick for that, but to be honest, I'm not overly worried too much about that. I'm just looking for the companies with the best upside. RBTZ, 32. That really isn't a huge issue for me. I'd buy either on that, but I just highlighted that one there because it's the prevailing wisdom of the majority of people, of the majority of investors, so that's the crap we get told anyway. Dividends, 0.53% for ROBO, 3.7%, which is quite a nice dividend for RBTZ. Inception date, as I said, so they're about 12 months difference, effectively 12 months difference. So ROBO's got a little bit longer history to hang a hat on, so it's had time to, the extra 12 months to prove itself. So I suppose on those factors, you'd probably have to go with ROBO as being the better ETF. But I suppose if I was inclined to have buy either of these ETFs, I'd actually go with RBTZ. I just feel that the companies in the top 10 have got a bit better growth prospects. That's just my feeling. Am I right? Am I wrong? Who knows? But I think if you invest in either of these ETFs over the next 10 years, you will do very, very well. That's my feeling as this industry expands. So robotics is going to be massive, and also artificial intelligence is going to be it's going to be substantial. So you put robotics and artificial intelligence together, and you're looking at a multi-trillion-dollar industry. So this is just a quite easy and simple way to invest in either of these to get exposure to that multi-trillion-dollar change in manufacturing and the way that we live. So why wouldn't you invest 5-10 grand now and just forget about it? Come back and look at it in 10 years, and I don't think that you'll be disappointed if you put money in either of these ETFs. But I'm inclined to have a crack at RBTZ. Yeah, I think Nvidia kind of they're going to be a big player in AI. I think AI is going to be even more transformative than the sort of automation and robotics side of things. So one to keep in mind anyway. I mean, that's my 2 cents worth on the whole thing, for what it's worth. Yeah, either of these really, but I'd be inclined to go with RBTZ, just the fact that I think some of the companies in the top 10 are a little bit better, and this hasn't run for quite as long. So, I mean, I haven't back tested it or whatever, but back test performance, I should say. But I think if you put a few bucks in either of these, I think you over the next 5 to 10 years, I don't think you'd be disappointed. Anyway, guys, hopefully that was all information that was well worthy. Adds value and was sort of worthy of you guys hanging around anyway. So hopefully, keep eyes open for the next video. Hopefully it won't be quite so long between the last one and this one. Thanks, guys. Ciao, ciao. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. Because KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks, guys. See you later.